If I had to trade one single strategy every single day for the rest of my life, it would be this one. Let me explain. So if I'm expecting the hourly candle forming from 10 a.m. to 11 a.m. New York time always to be bullish, I want to be long, ideally in the wick of this hourly candle forming. So if we keep playing this out, we'll see that the market pushes down, sweeping out this swing low, and we're below this opening price. Now remember, we are bullish. I want this 10 a.m. candle to expand upwards. If we also look at these candles you guys see over here, these are just hourly candles that I've got printed on my 1 minute time frame with an indicator. I believe there's a free one on TradingView. It's called higher time frame candles or something along those lines. If we look at what the previous hourly candle did, it swept out this hour low and then we closed bullish. So it's indicating already that the price could potentially push up to some sort of higher time frame drawn liquidity. Maybe it wants to tap into this hourly candle high, or it could potentially be trying to sweep out, yeah, so this 15-minute high as well. So if we keep playing this out, we do have a 1 minute fair value gap, but I'm not going to be shorting in this fair value gap because the narrative is higher price. I'm looking for price to continue going up. So if we do close above this 1 minute fair value gap, we could enter, but now this is pushing up too high, so I'll probably wait for a fair value gap to form, and we do get a fair value gap forming right here. Now ideally, if you are trading this way, if a fair value gap forms around the opening price, it tends to be more higher probability. And what I also like about this fair value gap is that we're below the opening price. And if you look over here, this hourly candle, the wick in my mind has already been formed. I don't expect price, or I don't want to see price go back down below this low that it's formed over here. So I feel safe entering at this fair value gap and putting my stop towards the low of this hourly wick. Ideally, when I do trade this way, I oftentimes just target 2R mechanically, because even if my direction is wrong, higher time frame wise, so if we're talking 4-hour daily, weekly, it could still trade 2R and get me out for full TP before trading with its higher time frame narrative. So if we just enter this with we'll go in with a mini, right? Boom. And we do get tapped in. So now I want to see how will price react when it takes out that swing high. Ideally, we take it out with a fair value gap or with a decent amount of momentum, which is what we do over here. And then, so it's expanding properly now. And you can see the 1 hour candle. It's looking bullish. It's looking strong. It's very important to focus on how the hourly candle should close, not at how it's looking right now. Many times when you take trades like this, you'll see the hour candle looks like it might be bearish, or it could still be closing, or you could still be closing bearish or pushing down further. But remember, we still have a lot of time in this hour to play out. So don't be too focused on how it's looking now. Try to remain focused on how it should look towards the end. At this point in the trade, I feel safe putting my stop loss break even, and we do have a potential fair value gap over here in where we could add into this trade. So I've removed the risk from my initial position. And if we do get a retracement to this 1 minute, I'll enter again, but with half my initial size. So it'll be 5 micros this time, meaning that I have the potential to make a full minis TP 2R, but the risk for that is removed. And now I'm only risking 5 micros to make another almost 2R trade. So let's see if we do get a potential tap in. We do not. So we'll just remove the order, and then you have your 2R trade, which has yielded you with a mini $1,200. So this is one example of how you could just use this exact same strategy to play out every single day. Now, it doesn't play out every single day, with that being said, but it gives you 2 to 3 decent trades a week. And if you're very patient and disciplined, you could wait for the best setups to play out. For example, this was a pretty decent one if you ask me, because We opened, manipulate down. We try to induce shorts, invert this fair value gap, give us a fair value gap below the opening price. And as you can see, it just shoots straight back up, delivering the 2R target. Now, if we wanted to, we could maybe look for some higher time frame buy side liquidity. But like I said and mentioned earlier, a lot of times that 2R target will get hit, even if you are wrong according to maybe the higher time frame, so like the daily and weekly. Because remember, we're only intraday trading, we're not swinging or any of that. So we just want to focus on what the hourly candle could potentially do and where it could expand to. In this case, it works out pretty nicely. It did push up a little higher than our target, but I'm more than happy with 64 handles, you know, on any given day. If we look at another example real quick, this is on a Monday. The trade we just took that you guys saw was on a Friday, so it's just the week after. If we look at the hourly, we can see this candle, the 9 a.m. candle, trades all the way back down, sweeping sell side, sweeping sell side, sweeping sell side. But there's a massive wick, right? So it's already indicating that we could potentially be bullish, maybe sweeping out these equal highs over here. Once again, open at 10 a.m. we mark out, and we want to see, do we get any entry or anything that could potentially get us into a trade for a long. Immediately we open, we just kind of chill around. Do we trade into a 5-minute failure gap? We do not. We do have a 5-minute order block. 15-minute, not yet. We could potentially inverse this 15-minute, but we have this 1-minute fair value gap, which is around the opening price. We've manipulated down below that price into this inverse fair value gap over here. So for me, I would take this long, bring my stop over here, so at the low of this hourly candle, and I'm imagining this to be the wick already formed for the hourly candle. Once again, we could just target 2R mechanically, or maybe even potentially target this high. But like I mentioned earlier, I like to target 2R because even if I'm wrong, higher time frame wise, it could still give me the 2R target. So let's jump in with another mini. Boom, and then let's let it play out. So boom, taps us in. Beautiful reaction of the fair value gap. At this point, we could just move stop loss break even, let the trade play out. This fair value gap is too close to our target for me to want to add, so there's no point in adding there. Let it play out. Another target smashed. Now obviously you will have losing trades, as any strategy has, but the big takeaway from this is that when you have the opportunity to add into your trade and remove risk from your initial entry, that's where you'll be making the most money. Managing your trades, scaling in and out, is what separates a good trader from a great trader. And being able to do so and have that ability will greatly impact your trading. If we look at another example over here, let's see what the hourly is doing. It's looking pretty bullish. We might be sweeping out this high, so we'll mark that. Drop back down to the 1 minute. Then let's see. So we do have this 1 minute fair value gap that it could trade back into and then form the wick of this hourly candle. But I'd much rather just wait to see what it does. So we sweep this low. Is there a 5-minute fair value gap? If there is a 5-minute fair value gap, mark that out. Let's see if we get some sort of entry for us to potentially jump into this long. Nothing so far that I want to take. Doesn't do much. So in this scenario, there's no trade to take. The market didn't do much. It just kind of went sideways. But there could be a trade for you to take at 11 to 12. So this is also another nice thing about this is that it happens every hour, right? So if you can't trade this open for the first, 10 to 11, for whatever reason, you can always come back and do it at 11 to 12. Or if you're going to trade the PM session, you can do it from 1 to 2 or 2 to 3. So in this case, let's see, we do have an hourly fair value gap over here now. So let's see if it trades into that. Marking, once again, always marking that opening price. We're below that opening price. We have a small fair value gap. I want to see if we can get a fair value gap. We do. Place our entry over there. Stop resting at the low of this hourly candle. maybe target these equal highs in this case. That could be also a play. Go in 1 mini once again. Let's see, taps us in. And we do have another fair value gap forming over here. Let's just see. In this case, once again, the R to R on this would not make sense. 0.86, not worth it. So let this play out. Trades back into this 1 minute fair value gap. And then expands higher, taking out those equal highs. So in this scenario, we did not target 2R. We targeted 3R. So it's all about how you want to read price that day and how you want to look at the chart. But like I mentioned, other times I would target 2R. If the market's trending pretty nicely and we have nice price action, you could target liquidity. In this case, these equal highs over here did look pretty nice, which is why I left my target at those highs for 3R. And that's that. It's a pretty simple strategy to focus on. It keeps you disciplined and you can't really make a lot of mistakes in terms of overtrading, since you really only want to be focusing around the hourly closes and opens. And you want to be ideally in your position quite early after the hourly candle forms. Obviously, I go into a lot more depth around this strategy and how to read price and what to look for in my mentorship. So if you guys are interested in that, the link's in the description below. Anyways, thanks for watching. Enjoy the rest of your day, and I'll see you guys in the next one.